Hey everybody, Jason here. Happy Friday. Hope you guys had a great week. Hope you guys got something to do on the weekend. And if you have time, tomorrow I will be live streaming somewhere between 11 a.m. and 1:30 p.m. somewhere in there, but I'll make sure, not bake sure, make sure to post it at least an hour or so in advance so you guys have a heads up. More people, the more fun it is. So we can go through anything you guys want. Get any questions answered that I haven't had a chance to get to. I did see someone had asked for a copy of the wheel spreadsheet, and for some reason it keeps asking me for permission. So I'm gonna see if I can I'll just go ahead and download a copy and then post it to the Discord and make that just a permanent thing in case you need that. Our wheel not doing very well at all. So next week, as far as Tilray is concerned, I mean it's just pretty much dropped. But it's going to be 6 months, a year experiment pretty much on it. So far today, we've been down quite a bit. I mean, a couple percent down, $3,000. We were just about to break even. Oh, we were up $33 for at least a tick, and now coming back down a little bit. Tesla started off the day pretty decent. Now we're pretty close to where it opened, down a little bit here. I mean, you can see that little chart there pretty much matches up with my account, except for my account is much more dramatic since we have over a couple hundred shares of Tesla plus all the credit spreads. Let's see, so far today, what have we done? I looked at rolling out calls on a few positions. Nothing looked like enough premium to make me want to do that at this time. So my Dropbox, PSTH, those couple, I just didn't see enough premium and somewhere that I want to sell those at. So the whole market is down as a whole, so I'll just wait until things get a bounce back up or we start moving up a little bit before I decide to sell somewhere premium on those, because the reward's just not very high at this time. Like, it doesn't make sense for me to do it for $5 to $5 for a couple weeks. Just doesn't make sense in my mind, when I should be able to, if the market bounces up. I mean, who knows, maybe it's going to continue down for a while, but I'll wait until then. Our Tilray calls, that is on our wheel. Obviously, we're going to be 100% on the money or out of the money in those, just because Tilray has dropped so much. But that's fine. We had a call on our shares, Tesla call, that expires today. Everything else has been moved or sold. We had the butterflies and the condors that we sold out of yesterday before everything dropped. I bought that protective put and I actually was able to bottom ticket, and I bought the one above it, changing it into a debit spread that I got paid for, and then right after I bought it, everything bounced back up. So it was like a perfect time. Still had protection to the downside. And then this morning, when things seemed to be chilling out, I just went ahead and sold out of that. So I got $100 on opening up the debit spread, and then I sold out both positions for, I don't know, it was like 10 or $12 or something like that. So an actual little gain there. DraftKings called, like, these just aren't worth rolling out to me right now. Gap, I'll probably just wait a little bit. I'll have to sell those out 3 or 4 weeks in order to gain any premium. But since they actually dropped a little bit, I might look at rolling those things out. Same thing with MGM. I believe that's quite down. And then Palantir, very, very down as well. So this was getting close to, I believe, the $27 level. And what are we now? We're down in the low 20s. Looked at rolling those out as well, but I'll have to roll them out quite a ways. So I think Palantir will be cyclic. We'll see we'll see kind of what happens, but I'm just not interested in selling any of the premium where I can't grab very much. Same thing with the snap. I mean, we sold this for $139, almost $140 that we're up on, but being snap is down now below $60, the premium just isn't that great. And I'm selling these against calls that I own, so, or against a call that I own, which is a $60 call that doesn't expire until 2023. So we have a lot of time on those, even though we're down quite a bit on that leaps there. We have our one of the snaps as far as a put credit spread, and this was just part of my effort to broaden some of the stocks that I play these on. This was a very small spread, just $100, $100 collateral for $16 collected. We are down on that a bit, but we'll see if snap just continues to the downside. We have our SPY put credit spreads expiring next week. We will let those expire to the worthless, of course, unless the SPY keeps continuing down and down and down. And in case you wanted to see, these are all the hey, we have a $2 we have a $2 dividend coming from our SPY holdings. Awesome. But you can see these are all the put credit spreads that we have on the S&P or the SPY. So we have our 621s that are expiring next week. And then a few days later, we have some 428s. Did I say 621? Anyways, 421s, 428s. August 6th, we have some 432s. And then as they get a little bit longer dated, I keep opening them up when we have these decent dips. So the closest, let's see, what do we have? A 435. This would be the closest short put that we have. So $2 out of the money there. But what we're going to do, or $2 in the money. So if we don't see some bounce up, I'll go ahead and roll that guy out a couple weeks. But I'm going to wait until we're 3 weeks from expiration, 21 days, before I bother messing with any of those. We have our AT&T covered calls. I sold these kind of closer to the money, and I'm fine with AT&T shares getting called away from me now at this point, since they will likely be lowering their dividend pretty soon, and that was the majority of the reason that I held them, kind of just a little savings account there. And then on to our put credit spreads that are expiring next week. The 617 was part of another play. I can go over that in more detail tomorrow. And then I've opened up some condors and some butterflies. This guy, for example, you can take a look at our strikes. So this is between 675 and 690. We opened these up for what, $75 here. You know, upside on this is going to be $400 pretty much. And then grabbed these. This is a let's see, what is this one? This is, oh yeah, this is a butterfly here. So if it stays between let's see, what do we have? Our 650 is our mid strike price. So anywhere around that 650, and it can move a little bit, but I only paid, well, I actually got a credit on this one, since it was opened up pretty much at the strike price, at the money. So a $465 credit on this, $500 collateral. So essentially, these have a $35 max risk, and for the upside would be $465, although that can never ever happen on Robinhood because they close you out early, and so you can never realize the full gain. But we'll look to just close that up next week sometime, as we have some gain on it. As these decay a little bit, there's usually some gain, unless it moves way outside of the range. So these are high risk, high reward. they're relatively low potential of hitting because of their high reward, and they do need to be closed out typically before expiration, or a ways. The little farther you are from expiration, there's kind of a sweet spot where maybe like Wednesday, it'll be a pretty wide range where I can close it out for a profit, and then coming into Friday closer to expiration, that width will narrow down to where profitability is. But as it narrows, the actual profit goes higher. So these, 100% return looks fantastic on these. So $35 is what I received, or excuse me, $465. So $35 max risk. If I can close them out, and close them out for $4.10, then I've made my gains. $4.30. Then I've doubled what I have at risk on these. And this is something we can go over in greater detail. We also grabbed these couple more butterflies. I paid $26 a piece for these, and decent max gain. So this is if it moves to the downside, or even temporarily. If it moves to the downside, I can go ahead and collect on this, and then just move on. And I think that's what we have expiring. Yeah, that's all we have expiring for next week. Following week, we have a lot of put credit spreads, and that will be after earnings. So pretty big event. We actually even have a 690 calendar on. So I'm expecting good things during earnings. Wow. Well, we had a nice big move to the downside just going through those positions. I wonder if there's any news or anything interesting. I saw that I believe I heard they got a price upgrade today. Yeah, I guess a little bit of movement here. I just want to see if there's any applicable news since I've been in a couple meetings. Nope. nothing interesting on Tesla. It's so funny, like when you actually read through the news that's even on Thinkorswim, that they'll put on Tesla's news feed. A lot of it is just not applicable at all. So anyhow, we are still a couple and a half hours away from close. Looks like we're moving to the downside, but I'm still thinking we'll see pretty good things for the week, or for next week, and see if that happened to correlate. I guess it did correlate with the SPY dropping a little bit more. So everything seems pretty volatile at the moment, and kind of like on a pins and needles, like what's going to happen next. A little bit of fear. I think the fear gauge has got to be up a little bit right now in the market. So, and even kind of taking a look at just like my holdings in general, we just see, a lot of red, a lot of down, just pretty much all across the board. But that is part of the cycles. We can't always have all up days or all up weeks. So hopefully you guys are investing for years and not for days or weeks. All right, love you guys. Hopefully we'll see you tomorrow. If not, have a great weekend, and we'll see you on Monday. All right, love you. Let's make a lot of money.